My name's Lee Saba. I'm the head of market structure for Rialto Markets. We are a registered broker-dealer, and our focus is on capital formation for private placements. Reg D or Reg S really is where we're focused right now. We also are going to provide liquidity opportunities in our ATS, which is short for Alternative Trading System. Fintech isn't new, but the term is new. We were joking around on the last panel where I had actually been saying that Fix was the original fintech, and it got its legs in the early '90s, but it really combined a technology layer with a business layer. So the financial acumen with the technology really made the global financial world hum along in a very standardized way. So I think people have, I think Fix was one of the original fintechs, but over time, we obviously had the advent of the internet. You had a lot of internet-based companies that really started paving the way. And as you look at some of the financial services that are in today, the bigger ones, a lot of their architecture was designed last century. Obviously, Fix, and Fix is good. I believe is going to be here for some time. Again, whether it's in regulated digital securities, whether it's in crypto assets like Bitcoin, Ethereum, Litecoin, or some of the other assets that are cryptographically based or blockchain based, and it's going to be the interaction layer. I see all of these protocols, like Bitcoin is its own protocol, Ethereum is its own protocol, and if you don't play nice with the Bitcoin protocol, it's not going to allow you to play in their sandbox. The same with Ethereum. So they are standards in their own sense, and I think we lose sight of that at times. So and standards can cooperate with each other as well. And where I look at say Bitcoin and Ethereum, and then again, I'm not trying to focus on the crypto asset realm, but it's good for example purposes as like base layers. Then you have a layer 2 version of this, which could be Fix, which will help standardize the interoperability between them. So you can still trade on either one of those chains through various mechanisms in a standard way. I think standards evolve out of like some disarray, so some complexities that are not addressed, and people will or companies will throw their hands up and say, we can't deal with it the way it is any longer. Therefore, we need to have a standard mechanism to deal with this. And if you just look throughout history, I think it's pretty commonplace. Whether it's standardized rules of driving, whether it's electronic trading standards, whether it's using an elevator, and the structure behind that. I think that to make it safe, to make it uniform, and to have it participate on a more global scale. I think standards help, but it takes a while to get to a standard. And I think Jim Northey earlier had a nice example of where he went through, and I don't want to steal his thunder, but he went through 85 different exchanges around the globe that were dealing with crypto assets. And they all had very unique APIs or application programming interfaces to access their market. And then what he saw over time, and it was a short period of time, maybe a year or two, they all evolved almost to a fixed standard. And then they finally said, okay, we'll just use the fixed one. Because there is some philosophy here where you grow to a certain point, you are disruptive, but at a certain point you need to plug into to some of the existing ecosystem, and you have to make some mistakes. And sometimes the best technology doesn't get implemented; it's the one that's most practical. So I don't think fintech is disrupting standards. I think it's creating more standards, and I think a lot of these fintech companies are in their infancy, where the standards haven't caught up yet, because the fintech companies want to move very quickly. The standards organizations want to slow down a little bit to make sure that they understand the ecosystem and apply tried and true best practices and marry the best of the new with the best of the old and, go from there.